Hey, everybody. Hope you're doing well. Roman Polnar here, coming to you live from Pillar 6 College Planning. And in this episode, I want to talk to you about the upcoming FAFSA changes that will be taking effect next year, October 1st to be exact. And for those of you who are not completely familiar, the FAFSA is the main financial aid form that you're going to be filling out in order to ask colleges and the government to give you some financial aid when you send your kids to college. And there are some pretty big changes that are now taking place that are changing everything about the form. So if you've been doing research online about what you can do to get more money out of the financial aid system by filling out the FAFSA the right way, well, you may need to relearn a lot of things because next year things are changing, and there will be some pretty big winners as well as, unfortunately, some big losers. And I hate to say that, but that's just the reality. But the good news is that even if you find yourself on a losing end of these changes, there are some things you can do to prepare yourself, which is the reason why we're having this conversation today, a year before these changes take effect. So, like I said before, this new FAFSA will become available October 1st of 2022. So if you have a high school sophomore in high school right now, then you're effectively going to be the first to experience these changes. But if you have a junior in high school now, that means the first year when you fill out the FAFSA, it's going to be under the current rules, and then all the other years will be under the new rules. It's really important that you know, because you're going to have to go through a change, and it may mean that you need to make, some changes to your financial information as well. So there are 5 biggest FAFSA changes that will be taking place next year. Overall, there are many, many more. It's 168 pages worth of changes that were just introduced in this last coronavirus relief bill in December of 2020. But really, the 5 of them are the biggest that will impact more families than everything else. And these are the 5 I want to talk about. Now, the first change is the FAFSA is going to be simpler. That's a good thing. Currently, it stands at about 106 questions long, and the new FAFSA is going to go down to about 36 questions. And the main reason the government was able to take away so many other questions is because they've removed most of the financial income questions. So on the current FAFSA, it asks you about some personal data, like the names, dates of birth, address, social security numbers, etc., just to make sure they can find you and track you in the system. But most of the questions are financial. They ask about your income and your savings. And all of the income questions are going away. And instead, the FAFSA will just pull all of your income data directly from the IRS based upon the tax return that you filed. So this is a big benefit to a lot of the low-income families because as it's happened over the last several years, it's the lowest income families that end up not completing the FAFSA because it's complex and these financial questions get overwhelming. And so the lower income families just ignore the FAFSA entirely, or they complete it incorrectly. Last year alone, over 2 million students that would have qualified for financial aid did not. And as a result, the government had over $2 billion of unclaimed financial aid left in the system. So it's really important that you understand what these changes are and how to complete forms in the right way and at the right time so that you can get all of the money that your family needs and deserves to help you pay for college. So low-income families are the big winners here. Unfortunately, the other end of the spectrum is if you have a mid to high income, the FAFSA changes are not going to be good for you. Again, that's the bad news. The good news is there are things you can do about it, and I'll talk about them in a few minutes. The second biggest change is the naming change of the EFC. That's going away entirely. Now, if you're not sure what EFC stands for, that's the expected family contribution. So when you fill out the FAFSA and you share your income and your savings with the government. The formula calculates, based upon your financial situation, what they think you can and should pay for college. That EFC is a dollar figure that the government thinks you should pay. And that number gets sent to every single college where your students apply, so that colleges then will know exactly how much to expect from you before they consider you for financial aid. Well, that entire EFC is going away, and it's going to be changed to something called the Student Aid Index, SAI. So, there are really no winners or losers in this, because substantively, it doesn't make a difference. It's just a name change. But it's important for you to know this, because starting next year, there's going to be no more EFC. It's just going to be the SAI. So whatever it is, no change here except the name. Now, the third change is actually very substantive, particularly for divorced families. Now, the current FAFSA only requires that the custodial parent complete the financial aid form. In other words, let's say you have equal custody of your child and you're in a divorced family. You have 50-50 custody. Well, under the current rules, you were able to pick the parent who's going to share their finances by completing the FAFSA. And as a result, you would pick the parent that has less money, to be honest. And the result of that would be the parent would qualify for more financial aid. I should say the child would qualify for more financial aid by having the custodial parent be the one that has a lower income and fewer assets. And the only way, or the simple way to do that, is just to have your student spend one extra day with the parent that has more favorable finances. And that was it. So it gave a lot of flexibility to families to pick the parent to get the most amount of financial aid. Well, unfortunately, the new FAFSA is changing that. Now, the parent that provides more financial support is going to be the one required to complete the FAFSA. And that's why I said that this is not a good change for the mid and higher income families, because usually the parent that provides more financial support is the one that has higher income or more savings. And because now the FAFSA will pull the information directly from the IRS, it's automatically going to require that the parent with the higher income and higher savings report their finances on the FAFSA. And that's going to mean that these kids are going to effectively get less financial aid than they would have under the current system. Again, that's the bad news. The good news, there are things you can do about it and plan ahead. But for the time being, if you do nothing, divorced families lose on this change. All right, let's talk about the change number 4. If you have multiple kids in college, under the current FAFSA rules, you get a credit when you have multiple kids in college. So for example, I'm using these numbers purely as an example. So let's say you have one child in college, okay? And your expected family contribution is $30,000 a year. What that means is the government and colleges will expect you to pay upwards of $30,000 when you send your kids to college out of your own pocket. Now, if in the same example, you had 2 students in college at the same time, then your $30,000 expected contribution gets cut in half. You're still technically expected to pay $30,000, but it's now being split between 2 kids. So your first kid is going to be expected to contribute $15,000 towards their education and another $15,000 from your second student. Under the new changes, unfortunately, there's not going to be a credit. So if you have a $30,000 expected family contribution, then college A is going to expect your first student to contribute $30,000, and the second college from your second student is also going to expect you to pay $30,000. So that in total, you'll actually be expected to pay $60,000, 30 each. Under the current rules, it's 30 in total. So 15 each. That's a really, really big change. And it's not a good one. So unfortunately, there are no winners here. Any family that has multiple kids in college, by default, is going to lose out on a lot of financial aid. Again, there are things you can do to plan around this, but you need to know what that is. By default, the new FAFSA is not going to favor families that have more than one kid in college at the same time. All right, change number 5, family gifts. So there are a lot of families that get support from grandparents. Grandparents might open a 529 account for their grandkids. They might just give them cash to pay for private high school or for other expenses, or they might want to help pay for college directly. Well, under the current not the tax, under the current FAFSA rules, grandparents' gifts or any gift from any family member outside of the parents gets assessed by the FAFSA as untaxed income. I won't bore you with the details, but it's bad. So over 50%, or exactly 50% of that gift gets calculated against your financial aid. Well, under the new FAFSA rules, those gifts will not count and they will not hurt your financial aid eligibility. So this is a big win for every family that gets outside support, whether it be from grandparents, from aunts and uncles, or other family members outside of the parents. So this is a really positive change. There are no losers here. This is a win for everybody. So those were really the big 5 changes that will be taking place. And they're going to effectively mean that any family that earns less than $60,000 is going to be a winner because the FAFSA is getting simpler. More kids are going to qualify for, more low-income kids are going to qualify for the maximum government benefits. They're going to be able to complete the form with ease. And so this is a really big win for low-income families. It's also a big win for families with outside family support, grandparents, aunts, uncles, etc. Unfortunately, if you're a mid to high income family, there's nothing, I shouldn't say nothing good, but there aren't improvements in the financial aid system. In fact, most cases, they're detriments. So if you're a mid to high income family, I encourage you to start researching ways in which you can prepare and plan ahead so that these changes don't hurt you as much as they will if you do nothing. The big losers, unfortunately, are also divorced families and separated families. So under the current rules, as I mentioned before, you have the option of selecting the parent whose finances are going to be more financial aid friendly. That option is going away under the new tax rule or new FAFSA rules next year. Another change that I didn't mention that I should now is that if parents are unmarried but living together, technically it's just the parent that, again, is considered to be the custodial parent that is going to be required to fill out the FAFSA and share their finances with the government. And with the new changes on the FAFSA, both parents, even if they're not married, will be required to share their finances. And I mean, the logic dictates the more financial resources you show, the less the government will award you financial aid. So again, if you're a divorced family or separated family, you want to pay attention and learn how to navigate these changes so that they don't hurt you. And obviously, any family that has more than one child going to college at the same time will also lose some of the financial aid. So you can plan around these changes. And that's why I'm having this conversation with you all a year before these changes take place, so that you can start to make adjustments and plan ahead so that these changes don't hurt you as much. Now, we've recorded some additional training for the 3 unfortunate, situations where you're going to lose out on financial aid. That's for mid to high income families, divorced families, and families with multiple kids, in college at the same time. So what I want you to do is drop the comment below and tell me what your situation is, and we're going to send you more training that is focused specifically on your situation. So if you're a high or mid-income family, just go ahead and put number one or put income in the comments below, so we'll know to include you in the training on how to navigate these changes for mid and high income families to get more money from the financial aid system. Same thing, if you're in a divorced family, just type in number two or type in divorce, and we're going to send you training on how to navigate these changes so that you can get more money out of the financial aid system. And obviously, if you have more than one child in college or will have more than one child in college, put multiple or just type in number three. And then last but not least, check out some free training that we have at freemoneyfirst.com. That's freemoneyfirst.com, because thing that we talk about all the time, that most parents and kids pay for college with debt because it's easy to get, it's abundant, the government's more than happy to give you a loan, but we want you to avoid having to put your kids into debt, and we certainly want you to avoid having to take on debt yourselves because, well, you don't need it. Instead, you should find free money first because it's there. It's just most parents and most kids don't know where to look, or they don't know what to do to get that money out. And we've got a lot of training and a lot of free resources for you. If you subscribe to our Facebook channel, or if you want to send us a note, just drop them in the comments below. We'll certainly keep you up to date with these new trainings. But right now, the biggest change taking place to the financial aid world is the change in the FAFSA rules. And you should learn how to navigate them so that in a way, you have to unlearn a lot of the things that you've learned before, because a year from now, it's all changing. So hopefully this has been helpful. If you have questions, type them in the comments below. If you want additional training on any of these three big changes, put in the number in the comments below, and we're going to send you that training. And until the next time we talk, plan well and best of luck to you. Thanks for watching.